Well, good evening, all. I'm Epstein, and here we are with your Spider ETF stock market wrap-up for one wild trading day on this Wednesday, the 9th of April, 2025. So, interesting day. I'll start you off in understanding that the president blinked. Yes, blinked. That's not a negative or a positive. I congratulate him for blinking. He was looking at what interest rates did, in my opinion. He went up to 5% in the 30-year bond. I think he was listening to Jamie Dimon, who was on TV saying, this is too aggressive. It's going to push us into a deep recession. I think he looked at the markets. You know he looks at the stock market because in his first term, that's all he looked at, and that's what he would tell you all the time. And I think he looked at what he's now focused on, the 10-year notes climbing away back to 4.5%. That is not what he wants, and mortgage rates today went to 7%. This is definitely not what he wants to see. So what he did is he did just as he did with Mexico and Canada. He put out the tariffs to go on last night. And then when the mess hit overnight, remember what I said to you, thin trading leads to lots of problems in the evening in these markets because we're sleeping. Came out, I've been up since 1:30 a.m. Central Time. So I know what I'm saying. People watch this and you get stressed as it goes on. But to make a long story short, he reacted to it. And he said, listen, we have 75 countries that have called to make a deal. We're going to honor them with making that deal. We'll give them 90 days to do it. Frankly, I think he gave too much time. But that's what he's going to do. And we're going to punish China because we said if you retaliate against us, we're coming after you with even bigger numbers. And they did it last night. So the president took up China to 125%, and he left the 10%, as I've been predicting all the way through since it went on, in place for everybody. So he's making up what we talked about. He'll use the reciprocals to get a better deal, and you got to be realistic. Not every country can have a positive trade with the U.S. It's impossible. All right? They just don't need all our products, blah, 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 and we need their stuff. He looked at what Europe has. There's certain countries he's going after. Europe's one of them. Believe it, all right? He's favorable to Japan. He's favorable to South Korea from the sounds of it. He is not liking what he sees in Canada. I think he's leaving Mexico alone, and then you've got all the others that you have to deal with. There's a lot going on. What can I tell you? But the market got relief, and that caused a dramatic rally that hit the marketplace, and it took a while to understand what was going on. I also think that a number of trade houses got caught in the basis trade with the 30-year and maybe even the 10-year bonds and notes. Basis trades are when you're trading cash against futures and you're trading huge volumes of the cash against the futures. And if they two don't narrow in the way that you want, you got a problem. And if you'll notice, you've been widening out. I've told you for 3 days, I don't get it. I thought that you had foreign selling in the markets at the back end. I still think you did. And I still think there might be more. But the base traders, they got relief. You went to 5% in the 30-year bond. I don't know if you know how dramatic of a move that is. It's historic in one day, the length of that move. And then it came back just as dramatic. So that's where you're at. In the morning, here's what you're going to be facing. You got jobless claims coming out at 7:30, consumer price index at 7:30, energy analyst forecast for the EI natural gas. You got Michelle Bowman coming out, her nomination hearing in the Senate. You've got 4 Fed speakers, Goolsbee, Harker, Logan, and Schmidt speaking. You have the Fed updating their March receipts and outlays. You saw today that Delta is not giving forward guidance going forward. And after June, I don't think Walmart's going to. And the reasons are, with these tariffs, it's too difficult to give you guidance. It's upending travel. It's upending price of materials. It's upending everything. And when you can't give your forward guidance and the markets are in chaos because of it, because Trump is turning A major turn of world events, all right, that hasn't been done in decades is now happening. And he's going to follow through with it. If you don't believe that, you're making a serious mistake. The degree, I can't begin to tell you if it's going to be the worst thing in the world or he's going to moderate. Nobody knows. You can't figure him out. But the one thing you can figure out, if he says to you he's going to do something, he'll do it. Now, how long it stays in place, don't know. But if he says that he's coming after you, they're coming after you, all right? And you better believe what you've got there. So let's go back to the charts now that we've talked about all that. And by the way, people that get my full research packages with my Morning Spider video, you got updates today on this. You had special updates coming out in the Morning Spider video. I warned everybody. I had the most unique title I've ever put out. Buckle in. This is going to be a wild ride. And it was one of the wildest. And that was at 8 in the morning before any of that was known. Rocket didn't move much at all. It closed down on the day. Mortgages are back to 7%. That's the core of their business. So problems for them. When we look at the chart action, you still have a lower low and a higher high. It's certainly not trending. The market is trying to fight a battle at the 100-day average. It did it here, and you got under it for a period, and you snapped back. You tried it again. You could snap back. I would look for resistance potentially between the 100-day average and the 18 in red. Where it stopped the break. I know you'll say it was the president's action. It just sort of happened to have fit in with hitting the Bollinger Band for the first time. You hit 1177 at the worst event of the morning, and then all the rest happened. So I'm going to repeat. If you haven't taken my enhanced Bollinger Band course at iraepstein.com under education, you got yourself to blame. Hit it here. Stopped on the rally there. Learn how to work with it. It's not just those. You got to learn how to work with the momentum of it. Very important that it's the two together that I believe make the clock tick. How's that? Do I see a trend here? None at all. Orly got its boost back, and it's fighting a battle 3 days in a row at what I call the line in the sand. In my full charting course, I teach that. That's your neutral point on the chart. Obviously, this has still got a problem there. How much of their material comes from China, and now the tariff's 125%? I don't know, but I bet a big amount, a big portion, maybe a monster portion. When you look at Home Depot, everything came alive. The consumer may be a little bit of help here, but they too, how much of their materials come from there? I'm not sure that they get as much as you think, but I would certainly think a lot of the power equipment comes from countries that are going to get tariffed. And that's what you've got to keep your eye on. It's not just China. So all you did is rally up to where the pros were selling short again. And that's what I think they did. I think they hit the market at 350, 647, and they'll put stops over that most recent high. Google had a nice bid out of an oversold market that's run the Bollinger Band, took out this last high. The downtrend leg, this whole leg right here, is now over. Now the market's back to neutral territory. So I don't see a trend trade. That's number one. You have a higher high and a lower low. I see momentum turning up, and the market managed to settle just over the 18-day average. There could be more to run on this one. In Netflix, I think you've looked at the bottom of this run. So unless you're going to take this out again, and I don't expect it, I think pros are going to buy the market now, put a stop under this low. I'm not saying that's an easy trade. I'm saying it's a difficult trade. It's almost $140 risk or so a share, and they'll look for higher prices. I'd like to get a better chart pattern than go chasing that. In Robinhood, you're getting close to taking out that last rally high. I still look for resistance between the 100-day average and the 18. Let's assume you take that out and you get through this 43.37. You'd still have a lower low and then a higher high. I can't join in on saying this market's getting into a tradable trend. In ExxonMobil, well, you saw what happened in energy prices if you're watching futures. One of the biggest trend days I've ever seen. 8 cents from high to low. You have any idea how insane that is? Now, have we seen a break low that might hold? Don't know. Depends what Trump does with the tariffs, but we have a pause. So the worst case scenarios are out of the market for a moment. That's what I think. Now we'll see what this market does. I call this neutral. You have a higher high, lower low, and you got back into the Bollinger Band after being 3 days outside of it. Remember what I teach, you rarely go more than 5. In XLF, this is the financial services. 1, 2, 3 days under the band, popped up. Notice how the first stopping zone is the 200-day average. Trend traders look at key averages. The next zones are going to be in resistance if it can get there between the 18 and the 100. That's if it can get there. In XLI, the spider, look for resistance if you can get more of a rally here in between the 18 and the 200-day average. Nothing I have says that you should be a buyer in that market. On the energy sector itself, the energy select, well, lower low, higher high, oversold. You ended this big break, but I don't think you've started a tradable trend to the upside. Now in GLD, as much as I want to be super bullish this, it's not saying to do that. It is saying that you've got a trade top in place with lower highs, lower lows. You had a nice bounce. I'd be watching between here and that Bollinger Band for the markets, the pros, to actually come out of their longs. So something to keep your eye on. SLV, trying to claw back into these major averages in an oversold condition, but that's all that I'm seeing out of it. In the copper market, you've just had a crash in copper. You're getting a bounce. Did the market embed? Both numbers were under 20. Both were under 20. Both were under 20. And both not under 20. So the answer is yes. But look where you closed. When you close at the top part of a range, you're literally at the highs, and you're just hanging on. The odds are you're going to lose that embedded reading and get short covering somewhere between here and up here if I'm right. So that's what I'm looking for. This is not a misprint. These aren't bad quotes. You fell apart and you came back and closed in the Bollinger Band and stopped at the 100-day average. I mean, it's exactly what I teach, but unbelievable. You had 1 day out of the Bollinger Band. You hit it again today. You're bouncing. You're still in a downtrend in the dollar. You have to get up and close over 28.42 in order to get bullish. And if you can do that, maybe you can get to 28.73. And if that's bullish, you're looking to see, do you drop in the euro at the same time and come down? So you put it all together. I don't think tomorrow's going to be anything like the action you had today, but it's not going to be a quiet day either. I think there's going to be volatility for all types of volatility traders. And if you want to take advantage and learn, join me in my research in the morning, both my Spider ETF. These are not on YouTube. This is where I do all the stuff that says, I want you to buy here. I want you to sell here. This is where the stop should be. That is where you should be. And we track the portfolio every day of what could have been filled if you took it and where it's at. Not every trade will win. We hold on trades also for a long time. I have traders on the portfolio that you're watching every day from December of 2023. They're in NVIDIA. Think of where that price was and where the market's gone up. And I'll show you how you peel out of trades. And you only own 40% now in it. So you've peeled off, and what do you do? How do you hold? And where do you build positions? Futures, we do the same thing. But in the futures research, I give you 2 written updates a day, Monday through Thursday, 1 on Friday morning, 1 Sunday night. So you're ready for the markets, and all kinds of special updates as they're warranted. And the traders get all that. It's a pretty interesting package. Just go to irapstein.com research. Under the word research, can't beat it. It'll take you right there. And I hope you join me. I'm Ira. Have yourself a great evening. Catch up with you later.